Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, everything you need to know in 90 seconds at 9 o'clock. With news, the bond market is over yesterday's retreat and yields are rising again today. But first, new claims for jobless benefits in the US hit a new and impressive low last week, falling again so that they are now at their lowest level since September 1969. There are now 1.73 million people on these benefits. Their insured jobless rate is now just 1.3% of their workforce, and that is a record all-time low. The highest ever was during the Trump pandemic, at just under 16%. It also backs up the very low overall general jobless rate of 3.8% in February, and strongly suggests that when it's reported for March, it will be much lower again. But it is not all good news in the world's largest economy. Core durable goods orders for February were expected to rise from January, but in fact they fell. It wasn't much, but it was a slip all the same. But on a year-on-year basis, they're up 12.5%, and capital goods orders are up 13.3% on that basis. Orders might have slowed marginally, but activity is increasing. The latest March PMI data for the US in their market surveys points to rising levels of factory activity and a 6-month high. The services sector is expanding just as fast and now at an 8-month high. In Japan, that same market survey records a small contraction. And it is clearer now that container shipping rates from China are falling, and noticeably. Bulk cargo rates seem to have topped out at a moderate level. Trans-Pacific cargoes are still at high levels, although ship wait times in Los Angeles have eased further. One reason may be because Vancouver is picking up much more traffic. Across the Atlantic, EU PMIs are suffering. These market PMIs for March report that growth is slowing, exports are falling, business sentiment is slumping, and prices are rising at a record rate. All, of course, because of the Russian invasion of Ukraine. But they're still expanding despite this crisis. Output price inflation is now at a record high in Germany. And in Australia, their PMIs are expanding in both their manufacturing and services sectors and at a healthy clip. But this survey also notes record price pressures. The US Treasury 10-year yield opens today at 2.35% and 4 basis points up from this time yesterday. And the price of gold starts today at $1,963 an ounce. And that's up another $29 from this time yesterday. And oil prices are down by $1. In the US, they're at $112.50 a barrel, and the international Brent price is $117 a barrel. And the Kiwi dollar will open today marginally softer, now just on 69.5 US cents. Against the Australian dollar, we're down to 92.7 Australian cents, and against the euro, we're soft at 63.2 euro cents. Only against the tumbling Japanese yen are we gaining. And that all means that the trade-weighted index for today starts at 74.8 and now off our 4-month high. We welcome your feedback. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.